Good evening. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, August 30th, 2021. We're getting on towards 5:30 p.m. Central Time. Interesting day. The end of the Afghan war has come and gone now. We heard from Blinken, that's Secretary of State Blinken, that everybody that wants to get out can get out, basically. We heard just a week ago from the president. Today, I'm listening, this could not have been 15 minutes ago, and they had on one of the House of Representatives, and he was on the phone with people at the airport trying to get on the planes. They couldn't get them. Yet we're being told that everybody that wanted to got on them. But what they're not telling you is the Taliban didn't have to let them get to the airport. They could have held them up. So we have supposedly a couple of hundred citizens still left there that, from the sounds of it, I know as much truth as you do. From the sounds of it, wanted to get out and didn't. So now their situation becomes one where they're either a hostage or they're in play to get commercial planes allowing to go in and out and get them from the other side of the airport. Remember this? And that gives the Taliban's bargaining power for the roughly $10 billion that the U.S. and other Western countries are holding of the old Afghan government. I don't know what's going to work and not work. If you believe our drone strikes are going to work real great on a regular basis without, at least that we know, troops on the ground, I don't know. Will there probably be people behind the scenes that we've left there intentionally that will broadcast things? I'm sure there are. It's too difficult. This, of course, hurts every agenda that President Biden wants. And of course, it tags him with the same legacy of President Obama in some ways, because under them we had Iraq. Now we have the same players, and we have the VP became the president, and we've got another one of these situations. When you talk what this is, it's a mess at its very best. But we're commodity traders. We're futures traders. Let's talk about that. When you take a look at the markets, what we got out of the Fed chair carried over today in some of the indices. Not all of them were up today. You lost ground in the Dow and the Russell. You were up in the NASDAQ and the S&P, and they both look like they have embedded. So they've converted from overbought to locking in a trend. So until it's lost, I'll be looking to see if traders keep buying on the breaks, which I'd expect. In the gold market, prices are holding. That's the best thing you can say about it. The dollar down a little bit. The Swiss franc got hit pretty hard today. It is time for you to shift gears into the November Brent, not the October. It goes off the board tomorrow. In crude and the like, remember that we have the OPEC Plus meeting now about to start. I would think they're going to go ahead with those 400,000 barrels a day each month of the increase to get back that nearly 5.8 million barrels that they cut during the whole COVID time. I think there's an awful lot of people that want to see that. They need the money and the market wants the oil. Bonds and notes, you're continuing to lose some yield. So when you look at the weekly chart of the S&P index, I've never seen anything say as consistent as this in my career. I've seen periods, but you got to remember how many years this goes back. Basically, you get small corrections over a 10-year period. It's quite the story. And because interest rates are so low, where are you going to put your money? That becomes the other issue. So as you take a look at the S&P, you can see the market realizes that after the Fed statement on Friday. The market's got a pattern of higher lows, higher highs, bullish. The market is over the 18-day moving average of closes in red. That's the 100 and the 2. So the bias is up. And bias is up when you're over that average, down when you're under it. The resistance is the upper Bollinger Band, and you're right there, right now. So you're pushing on it, but markets often back away from it. That's the best that I can say about that. And you've now got your embedded reading. So I am looking for the pros to be buyers in the market. You'll say in the NASDAQ it has that, but you cannot count tonight. So day one was Monday. I'll go back in time. Day two, And did Thursday embed? It did. So you actually got the 3. I'm wrong there. You have the 3 in there. I have one of the others of them wrong. That was just my old mind. So you have the embedded reading. To me, it's the same plan. But this market is trading outside of the upper Bollinger Band. You only stay outside of it 5% of the time. So whatever the reason's going to be, I will look for a pullback in the market. And when it happens, I think the pros will buy on the break in there, and they'll get out, in my opinion, if the market, the red line closes under 79, period. That's how I'm going to view the market. Let's see which one of these. The Dow didn't embed. That's where I made a mistake. It's the Dow and the Russell that didn't. I apologize. Higher lows, higher highs. Not overbought. So I'm not looking for this market to gain like the other markets. Maybe it catches on later, but right now it's a market in an uptrend that is overbought. It is having trouble getting up to the upper Bollinger Band. There's nothing bearish other than it's overbought. And in the Russell, it's the same thing. That's where I made the mistake. Higher lows, higher highs. You finally did clear the 100-day average, and you made your run to the upper Bollinger Band. I think you see that. That should be a zone of failure or strong resistance right now. The market is overbought. In the 30-year bond, you are trendless. You have a higher high, a lower low. The bias is up and momentum's just sort of doing this, just like that. You see it. You can see the exact action. In the VIX cash, what you've got is a downtrend in a market that is now oversold. How do you correct an oversold condition? You ever wonder? You have one of two situations, the way that I teach it in my charting course. You either develop an embedded reading where both lines get under 20 and stay there for several days, and until it's lost, you have that bearishness in the market like you got right through there. Or you immediately get a correction, which is more times than not what happens. So we'll see. But if you get a correction to the upside, that probably means the stock indices are going to pull back. So you build that into your trading psychology. In the 10-year note, what do we have? Lower highs, lower lows. We have momentum up, bias up, but trend still down. So you don't have much of anything in this market. In the dollar index, you have from Friday a higher high and now a lower low with the action into an immediately oversold condition. That's a hard one to trade. And I'd look for a flip-flop of that in the euro because 40% of the dollar index is made up in the weighting of the euro. And you're close. You didn't quite get like you did as close to the upper Bollinger Band, and it is in an uptrend, but too overbought. When you're overbought, I teach, doesn't mean I'm right. God knows I've been wrong a lot of times, that you don't attract new money. Now that can be algorithm money, it can be whatever the programs are that people have out there, in addition to the public making their trades and guys like me telling clients what to do as well. In the British pound, where do you think the resistance is? I'll call it right here. Now, if you can finally get over that number, then you start getting to the point where higher lows, higher highs, over that you have upside bias. But even if you get over it on a close, to buy it, you'd have to say, well, what's my risk? And if it's back under this low, that's $650, $700, that's a lot of money to risk. Let's assume it still works, that the market goes up. Here's your resistance points. And that's if you cleared that. So right now the resistance, the 18-day average, support back here, market doesn't act like it wants to go back to that support, so it has to reconstruct itself. Bitcoin has turned down. You lost the embedded reading. Here it is. And this is Thursday in the August. Now, Friday. My mistake. I have the August. I knew I had the other contract. Sorry about that. I know it should have been the set. In the November Brent versus WTI, look at the differential. Now, keep in the back of your mind, it's hard to play the energies when you get a hurricane of the magnitude of Ida. We know they closed down all the Gulf platforms. That's a given that they did that. Did any of the refineries get serious damage? We'll know about that tonight and tomorrow. We'll get reports on that. But how do you get the oil out anywhere? Okay, the ports are closed. They don't have any electricity. So if you don't have your own generators, and they don't on the ports operate a whole port, you've got to wait. And Louisiana, as it turns out, is one of the states that relies the most on a power grid based on electricity than anything else. So it's a difficult time. That hurt the grain markets today as they sold off, because how are you going to do any of the exports right now? If I don't have the exports, why am I bidding to the farmer or anything? You want me to take your grain? Well, I'll take it for less money. So that's how these things weigh out, and that's what you got to pay attention to. That doesn't impact, though, the Brent. The Brent's a world market. People need their oil. So the differential widens on an event like that. And you can see that playing itself out here as you look at the November Brent. I just missed the Bitcoin. Sorry about that. Higher lows, higher highs, overbought. I'll stay with the October crude for a while because it's got it. But when I did the spread here, just so you know, I did do November versus November for that. So I didn't make it something that isn't matching exact. WTI, a lot of resistance here, trend up, pretty strong support at 67.17 to 16. However, overbought, I'm going to repeat, I don't think that attracts new money. Heating oil, shortage right now, or is it jet fuel? What do you need it for? That becomes the issue. But again, just like in the energies, the combination is fairly formidable of the 18 and the 100-day average in green, the red and the green there. But again, overbought. Nat gas, you don't fight with upper Bollinger Bands. You could, I won't, and I don't teach you to. Let the markets back off. It either corrects by giving you a break or embedding. You patiently wait. And guess what the hardest thing for most traders is? If you had a guess, the one thing that they sort of screw it up on. Patience. Trades come in flurries, and then they back off as markets readjust themselves. That is so important for people to remember. The worst thing you could do is when an opportunity comes, not try to take advantage of it. That's the worst thing you can do. Why? Because when you miss it, you screw yourself up for a long time to come, and you go, well, I could have got it here, I didn't, will it come back to me, blah, blah, blah. I speak from experience. And one of the ways to avoid some of that, not all of it, is cutting your risk down. And with the exchanges launching these micro contracts, these little bitty contracts in the stock indices, they're 1/10 the size. If you think they're not popular, boy, are you wrong. If you don't think that they track exactly with the big contract, again, are you wrong. The pros will use both of them, and they can peel off positions because they're fungible against each other. $1 aside, so you're talking a $2 round turn commission for this. If that sounds that it's of interest to you, to get started, just call my staff, or you can go to our website, but add this /micro, and that'll get you right to that page, okay? We made a special page for that, and that's how you get to it. If you want to find out more, fill out the forms, do everything you need, it's all right there for you. I'm Ira Epstein. Look forward to seeing you tomorrow afternoon. Take care.